How you guys doing? My name is Adam. I'm originally from Egypt and I live in Orlando. I'm gonna make a video for you guys about channeling and RSI diversions. Uh, let's bring the daily for Bitcoin so you guys would see and understand what's going on here. For the people who they don't know what's divergence, divergence is basically the price goes up and the RSI does not follow, it goes down. So let's assume this point right here and this one right here. That happens always at the end of a trend, at the end of any line, any wave. It happens all the time, and I'm gonna show you now how to actually play it back and forth, short, long, and you keep going with it. Now, this diversion, it tells me that I have to short the market, even though it's so crazy for a market that going up to 20,000 and people all going long. But with these diversions, you have to actually short it. And you don't actually short the diversion by itself. That's when the channels comes. You have to short and get confirmation from the channeling, because you don't just short any diversion for no reason. You have to short the divergence with the channel. Market usually travel in a trend, and this trend is basically not a straight line up. It goes up, three wave down, up, three wave down, up, three wave down, same thing, down, down, three wave up, down, three wave up, down, three wave up, same thing. It's over and over. You can see it in everywhere in the trend. Even here, you go up, three wave down. It's always correcting in three down. So the market basically will go like this, correcting. You don't want the correction to pass the beginning of the wave right here, and I usually make my corrections in oops, not height, in red, so I know that I'm doing a correction. The market continue. The confirmation for the market to continue in the same trend is to break the bottom, to break the low. Market continue, and then it makes another correction again, and the correction I make it in red, and it keep going on and on and on, the same exact thing happening over and over and over. The way you channel this and the way you find out where is the correction, where did it end, what happened, is basically by channeling. You get your channel tool, you channel the first leg. As soon as the market break the channel, you know that you're doing a correction against that wave, or the market will go crazy and there is no continuation to the downside and it will break up. The point that the market, when the market break this point up, so that's it, you don't have a trend for the downside. But if the correction comes right here and then the market continue down, you are in a continuation for the trend. How do I know that the correction ended? It's the same exact thing. I draw a channel around the correction. Once the correction gets broken right here, and of course even that channel has to be red. Once the correction comes right here, you know that this is a short, so you short this position right there against this one here. Not against it, your confirmation is right here to make sure that you're doing good. As soon as this one right here passed the price right here, you know that there is continuation for the downside and you're in the right position. And then after that happens, I delete my white channel and I redo another channel, white channel, containing the actual correction, a bigger channel. The market keep going, and then bam, it breaks the channel again. So as soon as the market breaks the channel, I know the correction is up. I start drawing my channel for this correction. The market break it down, I know that my target is right here. This is going to be definitely going to be broken. If it's broken, that's it, I'm going continue with the trend. After it's done, I delete my white channel and I keep making a bigger channel. And of course, the bigger channel, I always make it in green, so I know this is the trend channel. The trend channel is green, the correction channels are red. That's how I do it. The correction channels red. The white channels is only the channels that contain every leg in the middle of the trend. So this is how we channel, and the market is really amazing because every correction that comes here that people get so confused about, oh my God, what's going on? The market is correcting, the market is doing this, the market is doing that, what to do? The market is really gonna tell you at the end of this correction, it's time to short. At every correction you're gonna see, most likely you will see right here a divergence at the very end. A divergence at the very end. Then at this point you will take a short against the actual channel. As soon as that channel gets broken, you have confirmation that your trade is good. As soon as that happens, you will move your stops to the point where you shorted, and you keep riding the trend. This is like a game. I'm gonna show it to you over and over and over now, and you guys gonna love this. But in the red channel, in the red correction, I want to tell you something extremely important. You probably heard me before saying ABC or three waves. Every correction comes in the market, it comes in three waves. So the three waves comes like this: A, B, C. Usually the C pass the A, but you have to look also in the RSI, because every correction that you see in the price, in the price, also you can see it in the RSI. People, they don't pay much attention to RSI, which is extremely wrong. You have to watch RSI 100% all the time, because some of this correction, it offers you a free trade. It gives you free money. It tells you, hey, take this money. So let's say an ABC comes like right here. Nope, not this one. This is an ABC. ABC, the C is higher. Let's see the second one. ABC, this one here. You see this? Like a three. It's not actually an ABC in my Elliott wave counts, but you get a three wave up against the trend, against the main thing. And the third one, it did not pass, but an RSI pass. In the 1 day, the market is telling you, please take this free money, short the heck out of me. This is a short, a big short. And you enter the trade right here at the same specific candle. You would never leave the trade until you get a diversion in the other side, or you go what I call extreme. Extreme is those area, the orange area. This, I call it extreme. And there is a third way that you can leave, which is something I call base channel. And I'm gonna show you the base channel, how does it work. Okay, so now you know how ABC looks like. Let's go to the 8 hours. Now, how do anybody figure out that the trend is broke right here? It's basically simple. You know, in the 8 hours, you draw your channel right there. Bam, you break the channel. You know that the trend, one of two things is happening. Either the market is correcting this wave, or the market is actually breaking the channel completely. But look, from 20,000, you got confirmation at like 17,000. Is there a way to see it more better than that? Yes, it is. If you actually trend and you continue making those white channels in every leg. Right here you got your potential trade. Right here you got your divergence. So at this pivot right here, the market is in divergence. A lot of people saying, oh, the market is so gonna go down, you know, or maybe a lot of people were saying, oh, 20,000, we're gonna see 50,000, but you're looking at it and you know that the market is tired. The market cannot go. We have already divergence. You can have divergence for a couple days, no problem. Like here, divergence 1, 2, 3. The fourth day, the market broke the channel. But you would never enter a short until you actually break the potential channel. So when you trade this one, you short right here against the top, your stops right here, and all you're hoping for is a test to the bottom channel and a break under that. And this is confirming that you definitely broke the channel and definitely you're going into the right direction, and you know the market is tired and the market is either correcting or it's completely going to go against this. So now you go down. This is how you actually enter a trade. So you enter a trade right here. You got confirmation at this area right here when you start closing after the channel. Now, how do I get out of the trade? I draw, first thing I do in any leg, I draw what I call a base channel. And why it's a base channel? Because basically it's touching the beginning of the wave. So if I draw a channel that it has the beginning of the waves, I call it a base channel. And you have three pivots, 1, 2, 3. In order for you to draw any channel, all you need is three pivots, like 1, 2, and then you reflect it from the third one. So as soon as I go out of the base channel, it's a great reason for me to collect. I take the money, I don't care, but I don't have any reason to flip the trade and go upside. I'm short, I got from here all the way to here, thank you, it's over. I have to wait for another trade, another signal that give me a signal, why would I short the market or why would I go long in the market. Now, because you have a new pivot, you have to delete this channel and you have to draw another channel, which is from here to here and to this pivot right there. So you have 1, 2, 3. While you're doing this white channel, boom, the market break the channel up. So a lot of people saying that the market will continue more than 20,000. Now, in any continuation up, what you're looking for is three waves. That's what you're looking for. 1, 2, 3. So you got 1, 2, but to you it's three pivots. 1, 2, 3. So you have to draw your red channel right there. And you color it red. Now, if the market really want to go up and break this, the market has to break this channel first. And if the market break this channel, that's a reason for you to believe that yes, the trend is going to continue up and all this was just a correction against the trend. But if the market goes again with the red channel and it break it down, you know that the market is following and there is more continuation to the downside because the correction is being, you cut the channel for in the bottom side, there is more downside. At this pivots right here, you did not have any divergence. This one is higher than this. This is also here is higher than this. So there is no divergence in the 8 hours. Let's check the 4 hours. Let me look at my other screen. Yep, in the 4 hours, you got a reason why. Like I said, in every three waves, you're always going to have a reason why would I short it. Right here. Right. This, if you were talking about this one here have divergence with this. So this is here going higher, this is going lower. If you waited the entire three waves, this one right here, it have divergence with this one. And this one too. So this pivot, you have divergence with the top right here. Oops, I made that channel, I'm sorry. You have divergence from here to here. You have also a divergence from here to here. Right here you have the same divergence in the RSI. Right there, where is that? This one. And it's the same thing, I'm not going to draw it again, it's right here. Actually, this one. So you have enough reason for you. You have one diversion, which is right here, going lower. This one is going higher. This one is going lower. So you have a reason for you to short that candle. Every three waves, at the end of the three waves, you're going to have a divergence. It tells you that let's short the market. If you short the market right here and everyone in the market calling 30,000, 40,000, whatever it is, of course you have to be so careful. So what you're going to do is you put your stops at the channel or at the previous high. If the market goes up, thank you, you lost and it's over. If the market goes down, that confirmed that yes, we're not going up, the whole thing is not done. And as soon as you get right here, you move your stops to break even. When you move your stops to break even, it's a free trade, you don't care. You enter the trade at divergence right here. So what you really want to do is you want to leave the trade in another divergence in the bottom, or when the market goes to the extreme area, those orange thing, the colorful one here, I call it extreme, or when you actually see a reason in any chart that tells you let's get out of the market. Let's see, let's go back to our 8 hours. So from here you shorted the market. Right there, I don't see any divergence, no reason for me to leave the trade. But in the 1 day, right here, the market at this right here, this is the same one in 1 day. This is the red channel that we draw. Let's delete the white one, we don't need it now. Right there at this leg, this is going higher, this is going lower. The market will never leave and change direction without showing you the divergence in the 4 hours, 8 hours, or 1 day. You have to see it, and never, never, ever look at 1 day, 15 minutes, and all those noisy charts that they don't make any sense. So lower, higher, I know that bam, I have to be long in this market, even though this was a correction and you're thinking that the market will continue down, but you got divergence, so you have to go in this 8 hours and go long. Where are you going to put your stops? Boom, right here. And if you're thinking this is going to go long, something is going, you have to move your channel. You have to actually expand your channel and move it like this. Actually, let's do it again. From one pivot to second is right here to the high right here. And this didn't happen yet. You only shorted this. You went here, you went long because of the 1 day. Most likely this here is going to offer you another divergence. There is no way the market will leave without you if you're looking all the time at RSI and you know what is divergence and how to find it and how to see it. So now you went long from this candle. The market gave you enough separation, it's doing great. Any change, anything is going to break the red channel and go up, you will be also calling the market is still going to continue up and trending. But as long as the market will never break your red channel, always go down, that means the market is still trending down. And as soon as you got this pivot or this pivot, you have to draw your bigger channel that I showed you before, like this. And the market usually travel and side the channel, and because you're making this red, so the big one, I'm going to make it green. I'm assuming that the market is trending down. If the market want to prove me wrong and want to say no, I'm trending up, all the market needs to do is to break the red channel and go up. That's all, or to spike the up and pass this point. So right now the market is going down. Where is the confirmation for my trade? I went from here all the way to here. How do I exit the trade? Right here in the 8 hour. Maybe you don't see it well enough, but it's right there. Up, down. Okay, this is how you leave. And of course, if you look at it in the 4 hours, here you go, it's way better, way cleaner. Let's delete all this junk. Right here you see it's going down, is going up. So every 3 waves, every correction, every red channel, at the end of the channel, at the end of the correction, at the end of this whole structure that people will so confused, what's going on? Are we going up? Are we going down? Whatever it is, the market will have to give you a signal. The market will tell you, yes, that's what I'm doing. I'm going down. You have to have the divergence. So you got the divergence, you're selling. Where are you going to put your stops? Of course, at the top, right here, or at the last leg. You go down. Where do you get your confirmation that the market is going your direction and everything? When you touch the channel, when you close under the channel. Okay, 1 second, guys. I think I have to take a trade. Okay, I'm sorry, I had to take a trade. Now you got confirmation that this is going down. How do you leave your trade? Where to get off? Of course, the divergence. If you go to the 4 hours, you will see lower, higher. The market is telling you this is the flip zone. This is the area where you have to change from short to long. The market cannot go without you, ever. So you gain all this profit and you come right here at this candle and you flip your position from short to long. And it's, of course, this is huge. That's a great swing. Now, while you're going down, what did you have? You have the chart, the channel. It's telling you what's going on. With the base channel, you already have the idea that I have to leave here without even the divergence. But the divergence told you not just to leave and go long. Now, you went long at this candle. After that, you delete your channel. Now you have 3 pivots. 1, 2, 3. Now you have to draw a channel again from this pivot to this pivot to this one. Now you have a real channel, not a base. Base was touching the beginning. Now it's a real channel. Now you went long. Of course, what you want to see is you want to see the channel gets broken because you want the channel to be broken, or you want to leave at divergence. The market offered me divergence, I'll leave. I don't care. So the market comes right here at this candle, right here, and give you divergence already in the 8 hours, which is this one here went higher than this previous high, but the price still way low. So the market is telling you that I don't have enough power to go and break this high. For the market to erase this diversion and this diversion to be bad diversion, the market need to spike all the way up to here, because this one here is lower than this. But here, I'm sorry, this is going up, this is going down. For this to be erased, the price has to be up right here, so both of them going to be in the same direction. So it didn't happen. So at this candle right here, you have a reason to enter to exit the trade and to actually flip the trade. So you went long from here, you came all the way here, and you flipped the trade. When you flip the trade, the market went against you. If your stops right here, that's fine. You have like 1 day the market went against you. Or let's see in the 4 hours, how did this happen? You enter the trade short right here. Oops, why am I doing channels all the time? You enter the trade right here, short. The market went against you. This whole candles right there, but the market could not take that high. So you know that you're already 100% secure, because that is the divergence. The market could not erase the divergence. I'm sorry. So the market is going down 100%. And when this candle comes, after 3 candles, this candle comes right here with another divergence. It proves more that there is more divergence here. Higher, lower. Lower, higher. And the divergence is still in there. There's no problem at all. So you short from here. Now you get candles that exceed your candle. So what you do is you move your channel up, up, until the market still stand, in your side and go for it. If the market goes from here higher, you're gonna lose this swing, and this is gonna happen. It doesn't matter. Look how much swings, how much money you did in the last couple swings, and you will see the market can never take money from you, except if the market is definitely gonna give you a reason to enter again and to make money again. So this is the last one. You went short right here. The market already told you you're wrong. Yes, you are short. Yes, you're making money, but you're wrong. The market is not going to continue straight. Why? Because you have another divergence right there. The market tells you flip your position or you're going to lose. Right here in the 8 hours. And the reason we look at the 8 hours, because you look only in the chart 3 times a day, and 8 hours comes with no noise, not like the 1 hour and 15 minutes and all this junk charts. You look at 8 hours, 4 hours, and 1 day. You cannot look at anything more. Okay? So in the 4 hours, right here, the market tells you to go long. Even though you're traveling right, but it tells you, nope, I'm going to have to go up. You went up. Anything you're going up against the trend is down, which is the green. Anything going up, you know that is going in a red uh, in the red channel. And the red channel, the way you draw it is you wait for 3 pivots and you draw it like this. And like I said, at the end of any 3 waves, against the market, against the trend, you will always see a divergence. See at this one right here, bam, the market give you a divergence again. The market tells you, I'm so tired, I cannot do it, I have to go down. The market give you divergence right here and right here. This one is flat or going up, and this one is going down. So you know that the market is going down. You take the short here, you take the money, you collect the profit, you take the short here. Where are you going to put your stops? Of course, at the very top right here, where the market could not take that pivot. The market was so tired to take that pivot. Oh, of course, I'm going to short against that pivot. So you short the market. Where is your confirmation? Of course, has to be a red channel. Where is the market? Where is your confirmation? With the channel. A break of the channel tells you that, oh my God, I'm good. You take your stops from here, you put it at the break even, so it's a free trade. And where else you're gonna leave? You're gonna leave when you touch the extreme area, this here, the orange or red, whatever color it is, or when you have divergence. Right here in the 8 hours, you don't see divergence. Of course, you're gonna look at the 1 day and 4 hours and check. Did we get divergence right there? Where did we short? We shorted right here. Nope, not this one. We shorted this top right here. It went good, and bam. Right there, there's no divergence. Right here, there's no divergence. Right here, you got your divergence. So you got a great swing. Look. Bam. This is a swing trading. You don't use this with the 100x, 5x, with all this junk. You just use your money and you make money in every single swing. Right now, the market tells you that I'm so tired from the downside. Downside is over. Collect. So at this candle right here, in the 4 hours, it's telling you collect your money, flip your trade. Now we're gonna go long from here. The first thing you're gonna do when you go long is redraw your white channel. Always keep channeling. Where is the main pivots now? We have right here, and right there. And you extend it. When the market comes up right here, you have 2 choices. When the market broke your white channel, you can collect. There is no shame of collecting money. And then you wait for divergence to enter another trade, or because you already enter the trade from divergence, you know that there is no way the market is going to give me 3 waves up, and the market will have to give me a signal. The market will have to end with a signal. So look at this. This is the February 6th. You're talking about February 20. So after 2 weeks, the market give you a signal. You gotta be super patient with the swing trading. You enter a trade, it moves up, you make it a free trade, and you leave it. You go to the chat, you talk to the people, people saying market is up, market is down, whatever it is. You have a swing trade, has nothing to do with whatever direction the people saying, whatever, anything. You enter a trade and a divergence, and you're going to leave the divergence or extreme area. So you got the extreme area. As soon as you get the extreme area, you know that the divergence is coming very soon. You got it right here, the extreme. This here, you don't see it as divergence in the 8 hours. Of course, you're going to go to your lovely 8-hour chart, and you will see the divergence right there. Extremely amazing. Boom, the market telling you at this pivot, at this candle, specific candle, this candle that didn't mean anything to anybody, the market telling you that I have to collect and I have to flip my position. If I'm playing the market, I'm actually not going to wait for this candle. I'm going to flip from this candle. Why? Because this one offered me a diversion first. You guys don't use Elliott wave, so you don't know which one to use, because in Elliott wave we know that, you know, not the first diversion, the second diversion, and that really makes more sense. But in this, since you don't know Elliott wave, you have to go with every single diversion, because this is what the market telling you. I'm ready, I'm off, it's over. This one here is going higher, this one here is going lower. So you will short this one. If you put your stops at the break even, the market is going to come and take you out. and then it's going to give you another reason to enter a short. It's right there. So you would short the market right here. So you gain all the profit for all this swing. But of course, while this swing is going, you have your channel already, and this channel, you know that is red because it's against the green, and you know exactly where and which candle that you already, oh my god, I'm doing great. It's actually breaking the channel. It's going for what I want. It's going. It's perfect. So it goes down, but after it goes down, what happens? The market tells you, oh my god, you're wrong. Yes, you are making money, but you're wrong of the direction. The direction is, it's not going to continue down because it gives you another diversion right there. The market telling you that, okay, flip. You got your flip signal. Boom. Going lower, going higher. So you know that you have to collect this money and you have to go up. You take your money, and now there is something huge happened, which is, let's extend the green. Let's get the 1 day. What happened is you actually broke the green channel, which is the most important channel for you. So when you break the green channel, there is really a big reason for you to believe that the market will trend up and it's going to continue up. People calling this is the bottom, this is the bottom, yes, it's never going to go down, whatever. You have a great reason to say, oh yeah, they're right, because we already broke the green channel. You have no idea it's going to go down again. But in the meantime, you would never stop making the red channel. Now let's draw the red channel again. This time the market got me out right here. I was short, I got the money here, and I went long. And the people saying the market is going up. Now where is my red channel supposed to be? One. Nope, I made it wrong. Bottom. Here. Here. The market really, and this has to be red channel. The market really want to prove that it has, oh my god, come on. Okay. The market want to continue and say, yes, I'm going to go up. They have to change and they have to break this channel to the upside, not to the downside. The market did not do that. It went up and it broke it to the downside again. And you were long from here. Where did you leave your trade? Of course, at divergence. The first divergence you see is this one right here. I would leave my trade right here, so I go long at this candle. This is lower. Okay, let's do it again. Let me show you. Lower. I don't stop flipping trades. I don't care where the market is going, what the people saying, oh my god, it's going up, it's going down. It doesn't make any difference for me, because basically I just flip I swing trade. You know, I don't care. I have my stops. I know where's my stops. I know where's my channel. I know when it's really trending in which direction. I don't care. So right here, I short. Everybody's calling the market up. It's breaking the channel. I am seeing it is already almost tested the channel and try to break the channel here. But I still take the short. Why? Because the market would never go up. Never go up without giving me a signal. Yep. The short is wrong. And how does the market do that? With the divergence. You see right here, this is going up. This one here is going down. So you shorted the top. At the bottom, at this candle right here, the market tells you, you know what? Collect profit, switch, flip. So I come right here, I flip, I go long. Where do I leave my long? In a divergence, right there. You see this divergence right here? Right there is going higher, right here is going lower. I flip my position right here. You go right here in the top, at that candle. Everyone in the market saying, oh, the market is definitely going up. Even you are so scared. How the heck I short this one? It's very close to here. It's going to make, if it's a three wave, if I'm looking for a three wave, I'm expecting the C to pass this one. I'm expecting this to go up. And either here, look, up, down, up. So in both of them, they did not reach the top. But I have divergence. Do I have to think much? Nope. I'm just taking it. Where I'm going to put my stops? Right here. You want to take my stop? Look how much money we made already. You know, you want to take $100, $200 from me? Take it. Prove me wrong, because every time the market is going to prove you wrong, every time the market is going to take money from you, it's going to end up that the market is going to give you a reason to enter a new trade, and you will make the money back if you follow 8 hours, 4 hours, or 1 day. If you go 1 hour, 15 minutes, you're already in the dark. You're playing with the noise, and you're playing with the so many stuff that it's just going to get you crazy. It's going to kill you. Okay? Now, we went short right here, even though everyone is calling outside. Even you are questioning yourself, what the heck, I'm outside of the green channel. This is the main channel. But you know that the green channel itself, we can make it bigger. The market cannot. The market did not want to go up. It was fake. So you make your bigger channel. You go down. Where you're supposed to leave, and where is your confirmation for this trade? You shorted right here. You got your confirmation right here. Do you leave at this candle right here? Well, if I get 4-hour divergence at that candle, I will leave the heck out of it and I'll go long. Let's see. Shorted here, this one here, and this one is higher. You see, there is no divergence right here between this and this. So there is no reason for me to leave this right here. Let's check the 1 day. Sometimes the 1 day give you amazing signals, but I have no idea where is that. Nope, the 1 hour did not. So you shorted the trade, you come right here, the market went against you 3 waves while you're short. Of course, you're shorting extremely at the very top, at the very right candle, not the candle after, not the candle before. You are short at the extremely important candle. Now, the market went against you 3 waves. What happens when the market goes against you 3 waves? Usually, the market have to give you a signal. Let's see, a signal. It's not like wow divergence. I would never use it, but there is divergence right there, but I would never use that. I would never, you know, even think about it. But you have to understand that when the market goes up against you, the market is challenging every pivot, every major thing right here, every top of the swing. If the market comes to this top, it's either gonna try to break it on price or RSI. So the market comes to this top right here, or maybe this one right here. It passed it in RSI, but it could not pass it in the price. What does that tells me? It's a weakness. The market is so weak. If the market really want to prove that he's the man and he's going to do it, the market has to go all the way up to here to break this pivot. That's why when people ask you, what's your confirmation? What is this pivot important? Why you have this confirmation? You have confirmation because you eye the RSI and you know that this pivot is extremely important for the market to prove that it's upside, it's going to continue. You need to break this one. You wanna from 9,800, you want to break 10,800. You want to go $1,000 up. You cannot do it. Thank you. You're going down. And that's what happens at every time. You're short in this trade. You did not get a signal to sell. This is not a signal. Some people, they would think it's a signal, but it's not, because this is going here higher. It's going higher. It's not a signal. Market went up against you. Start going down, down, down. Bam. The first one here. This give me a divergence. Like I said, in Elliott Wave, I know I use Elliott Wave for most of my trading. Elliott Wave can tell me which divergence should I use, the first or the second in specific waves. But for you guys, you know, you just go in with the channeling and RSI, you don't care. So this is a signal right there, divergence. This is going up, this is going down. Okay, let me draw it for you again so you would understand. This is a flip signal right here. So from short, I'm swinging. I'll go long, even though after the fact, you see, it did not go long, but you're still gonna go. You would never stop flipping this with the RSI. Okay, so you went long right here. You did not get any reason for you to go short. Let's see in the 4 hours. Where the heck are we? right here. We did not get any reason. Maybe actually this is a reason, but I would never see it. You see this? That's a flat top right there, and this is actually going lower. This is a diversion already proving to me that the market is going to go down. But usually when I short something like this, I put my stops in the top anyway. So I know that the market needs to challenge this pivot. And I'm already taking all the money from here, so I don't care. You know, I'm taking profit at this candle. And which candle? This candle. And as soon as I take profit at this candle, I use this top or the actual white channel that we didn't actually draw right now, but you have to maintain the white channel. So I don't care. The market comes up, it gives me a proof that it's going to go down. Right here, it goes down, and now we got the second diversion. This second diversion, it confirmed for me that my long here was not wrong. I know it's a second one, but if I took this one, this right here is going to confirm this is the right divergence. You go up, and of course when you go up, what do you need to see? You need to see divergence to leave the trade. Did you get a divergence right here? Let's check. Do you see this top with this top? And you know why did I look at this top? Because the market could not break it here. The market could not break it here. The market act. This is a major pivot for the market. The market is looking for this pivot right here, which is right there. Right here to right here. The market is going up in RSI and is going lower in price. The market is telling me again, get out of your long position and short. So you short. Now it's time for us to update our white channel. You're going from this high right here, low. So, and you already got to this pivot, so now you have a channel. And it's a white channel. We went up. We shorted right here, so that means the channel has to be containing this. It went down, and then it tested my, my trade. It's like, oh my God, it's gonna go wrong against me, and then bam, it went down. As soon as it entered the channel again, I move my stops from here to here. I have a free trade, no matter what the market wants. I don't care. The market comes at the bottom right here. It went to the extreme area. What is extreme area is going to offer you? As soon as I see an extreme area, what am I going to looking for? Divergence. Bam, right there at the very first candle. I'm sorry, the market tells me RSI is going up, price is going down. It's time to flip the trade. So you got from here to here, free swing. The market tells you exactly at which candle they want to flip. So you flip. You went long from this point. Now, let's move this somewhere else so we can use it later. Now the channel gets bigger. The market, you're long right here. The market comes against you in one candle. When the market comes against you in that candle right here, if your stops at the bottom right here, you're out of the trade. If your stops at the channel, you're still in the trade. If your stops at the last low, you're still in the trade. But let's assume that your stops at the bottom of the candle. Boom, the market comes, gets you out of the trade. Look, the market, what it's going to do? It's going to offer you another entry right here. Why? Because this is going lower, this is going higher. The market tells you, okay, don't worry about it. I'll let you in. So you get in another long. If the market got you out at the first one, you get in, and then what happens? It breaks the channel up. It goes down in a crazy candle. What happened at this candle? Something very strange. You got RSI acting stupid. Another divergence. Actually, it's not a divergence. This is going up. This is going up. Let's check the 4 hours. Yep, you have it in the 4 hours. A spike like this has to give you something. It goes all the way up. It goes all the way up right here, right there. Actually, it did not challenge even this one. It challenged only this one right here. So it challenged this. So you know that where is the market is acting weird? Where is the pivot that I have to watch? Is right here. Why the market doesn't like this pivot? I have no idea. I don't care. The market could not break up. It could not go to it. It just gave me a divergence with it. Is it a good signal by itself? I'm sorry, for me to flip the trade? No. Even if I'm gonna lose, even if I'm gonna lose, I don't care, because this pivot in the middle right here, you see, it's not a major pivot. This is not nothing for me. I don't like this. I like this one. I like this one. When you look at the RSI, you can tell right away where is the major pivots. One right here, one right here. Top is pivot. This one, this one, this one, this one. Going into the swings itself and looking for one of those tiny little corrections in the middle of the swing, it's okay. It gives you an indication where is the market going, but it's not the pivot that I would take a trade against it. So I'm long. It went up, down, went up. After this candle finished, look what happened right here at this candle. The market will actually evened out right here at this pivot between this one and this one. So the market telling me I'm so tired with the major pivot right here. Right here to right here. So I have to flip my position to short right here again. I was long, you get short. The market is never gonna stop telling you switch. You went long here. Look what happened right here. You went lower. It went higher. The market tells you collect and switch. Flip. So you get this. You get the thing. Flip it. Thank you. You're going up. As soon as you go right here, not even, you have no idea that all this is going to happen. You're not seeing this. As soon as you come to this point right here, and you have a newer high, you start looking at the RSI. Is the RSI challenging something? Should I go lower? You will find the RSI here in the 4 hour challenging this one. So RSI is basically what is, what the RSI is doing right now is the price is challenging this price. So what is going on is 7,000 is looking for 7,500 as, am I gonna break this or no? Is there enough steam? Is there enough power for this to get broken or not? But you have an evidence that most likely they're not gonna break it. If they really want to break it, boom, break it. Thank you. Take the $500 loss and that's it. And you always getting your indications, getting your trades. I have no idea where we are now in the 8 hours. Let's see. Yeah, we're right here. Right there. And look, in the 8 hours, it's even way, way cleaner, way nice. That's why I always use the 8 hours. Right here, at this candle, you bring up. This is going up. And the price is going lower. So at this 8 candle right here, 8 hours is the best chart ever. You would get a signal. You will look at the market 3 times a day only, and you don't care anything. You can go to the chat, talk to your friends. Everybody's saying market is up, market is down, posting charts for people, doing whatever. You don't care. The most important thing for you is 3 times a day to look at 3 different candles. Did I get my divergence? Did I enter the channel? Did I get out of the channel? Where am I compared to the green channel, the main green channel? Okay, so right here, the market is telling me that I have to go down. You go down, as soon as you go down, the market is going to give you another signal to go up. And it goes on and on and on and on in every market, every chart, everywhere. A market can never go any direction, anywhere, without showing you that let's flip. Right there, divergence. You can see it, it's so clear. And the bottom right here, divergence. You can see it so clear. The market right here tell you, please get up, let's go long. At this top right here, it did not give you a reason to short, but if you look at the 4 hours, let's see. I don't know where the heck is that. Let's make it smaller. Let's see, which top is that? This is 25th of July. Oops. July 25th, right there. 24th, 25th. Oops. Right here. Right there. The market in the 4-hour tells you it's an amazing place to short the market. So the market give you a signal to long here. The market also give you a signal to short. And when the market give you a signal, it doesn't give you a signal or late signal or lagging signal or whatever. It give you a signal at the specific candle. Why and how did you flip it? Like, I actually flipped the trade at the extremely top. Let me show you. Oh, come on. At the extremely top yesterday, right here. I flipped it at 3,700 at the very top. How did I know? How did I know? It's pretty simple. Pretty simple. I have so many channels. I have the channel that contain the actual trend, which it did not give me a signal. Right there. That was the top. It did not give me a signal. The signal just came right now. But I have my 15 minutes inside, right there, inside the actual thing. I have my smaller channels that tells me a break is coming. Right there. This is a channel right there, right? And this is the channel right here. And you even, if you want to go smaller, you will have a channel right there. So I had that channel, and let me take some because it's confusing for you to see it. I always color my channels so I know which is which. So now inside this channel right here, the top came with divergence. The top came with divergence with this one. The top came with divergence with this one. I have enough evidence that the market is already super duper tired. We're all going from 10,000, 11,000, 12,000, 13,000. What is the reason for me to short this specific candle? Well, it's basically I got the divergence and I got the channel break. There's no other reason. I already shorted the market. That the trend is over, that the market is going to continue down? Who cares? I don't care. I don't really care. Why? Because at this candle right here, I was so stubborn and I made my mistake yesterday. I told the guys yesterday I made a mistake. At this candle, I was supposed to go long. Why? Because this candle right here got divergence with this one right here. You see this going lower? This is going higher. The market could not break this yesterday, the 11,000. It could not. It was not powerful enough to break it. So I know that the market will go up, and then the market will have to give me a signal to go down again. I should have shorted, but I didn't. I kept my short, which is a mistake. And this is what happens when you actually be stubborn. It's not good. Is the market is done? Is the uptrend is done? Who cares? I don't care. Every time the market breaks like this, all I care about, did you break the channel? Am I in the right trade? Like I'm in a short position right now. This short position right now is going diversion against this. So you see the market is really looking for 10,300 or 10,400. Am I going to break it or not? This is the next pivot that the market is looking for. And the next after will be this one. Why? Because we already have a divergence. We already have a divergence. I'm supposed to be in the long position. But since I already got the top and I already got a major break for a channel, not just the small channel, I got the green channel broke, everything broke. So I have a reason to believe maybe something stupid is coming. If something stupid is coming, why would I let go of my position? I already shorted the exact top. Why would I let go of my position? I just keep going lower and lower and lower with it. As a matter of fact, I already, in the 1 hour here, I closed my position, I went long, and then I went short again. Right here, I went long, and then at somewhere here, I went short again. Why? Because I can see that the market is trending down. That's it. It looks trending. The market want to prove this wrong. It's so easy. It's super easy. Break the channel. You break the channel, I'm long with you all the way and leaving in diversion. That's it. So the market right now is going down into this channel. When do you think we should enter a trade for the upside? based on what you've seen in this video. Only in one situation, when the market goes here, makes me in a 4-hour or 8-hour a divergence, yep, I'll go along with it, 100%. And where's my confirmation? To break the channel. The market want to continue and to prove that the upside trend is going to continue, yes, go break this one here. I'll swing trade with you up, down, any direction you want, it doesn't matter. All you need to see, all you need to look at is divergence. People, they kind of know what's divergence, how it is, but they ignore it, or they choose, to ignore it. Look at this here in the 1 day. People were calling, how do I find the tops and bottoms? Come on. How could you not see this divergence? How could you not sell this? There is no reason for you not to sell this divergence right there. You break the channel, you break the second channel, you already have divergence. You have every reason to go short. Look at the bottom right here when we started this. Why did people call? I called the bottom, I called the top, I know the bottom. Of course it has to be the bottom. Look at this. You have an extremely amazing divergence, a major divergence. It has to be the bottom, or even if it's not the bottom, who cares if it's the bottom or not? Right here, I have to be long. You already got all this money swinging. So right here, you got the divergence. What are you waiting for? You gotta, if this breaks the channel, and of course it did break the channel, when you channel this right here, you already broke the channel from before. So you have to try the first divergence. If the market come and get you, you have to try the second divergence, make your channel bigger, and bam, you break the channel to the upside. It's gone. And if you go up here, how do I know that I have to sell at this specific candle? How? There is no other way than going 4 hours and channeling this leg and looking at the divergence. Look here. Already it comes with divergence. The market is telling you at this specific candle, this is the flip. You have to flip your long to short. The market have to tell you every time. Look at right here. Right here. The market have to tell you. A market cannot go. Let's make this 8 hours. I'll show you at every single swing that the market telling you, let's flip, flip, flip. Look at this right here. You're going up in a trend. Sorry. You're going up in a trend. What happens here is you got A, B, C, or you got the 3 waves. The third one did not pass the first one, but in RSI it passed. Why this is not a long? Why people was thinking twice? Why would I not buy 7,500? Of course you have to buy 7,500. This area has and where is your stop? 66. I know it's too much, but here, look at RSI. It's telling you upside down. Look, boom, boom, boom. Here in price, boom, boom. It couldn't pass. The price doesn't have enough power to come and take this. And this thing, you see it over and over and over here. 1, 2, 3. You did not pass the bottom right there, and you pass it right here. Why nobody seeing this as a signal? It's a signal. Right there. Look at this. The price went high, right here, went up, went down. That's a signal for buy. That's a beautiful signal. The RSI will offer you the exact candle to flip your trade right here. You see this going lower? The market came, tested, went like a couple dollars under, but it couldn't. That's a flip. That's a signal. Flip. If you were in a short position, you will flip. If you did see any sign before to flip, you will flip. I will flip anything, anywhere, from long to short, as long as I have my stops at the right position, and as long as I know that I already got enough swings. So what, the market want to take $1,000? Take it, thank you. You already gave me 6-7 in the last swing. You know what I'm saying? So it doesn't matter where the market is going. It doesn't matter. What really matters is you have to understand that there is no trend can change without a channel break. There is no correction will start without a channel break. And if you want to go smaller inside the same channel, the same leg, you can go like 15 minutes and you can even channel this. You can make it smaller to the point that you really know where is the market is going to flip. Where am I going to get my diversion? You can expect the diversions before it comes through the channels. You can expect this whole move just by channeling, going in and in and in, and make sure you don't make everything white. You have to, pick colors for everything, because that's how you know. I broke the red channel, so now I'm expecting the green channel to be broken, and so on. I hope this is going to help, guys. And of course, this is not, I'm not telling you guys what to do, what to buy, what to sell. It's up to you. But I'm just showing you how to channel, how to know the trend is over, or not even over, the trend that's been challenged. How do you play divergence? How do you know where to flip, where to see with your eye? Of course, I advise you all, guys, that never look at 1 hour, never look at 15 minutes. You can look at it, you can play it. In order for me to pick the exact top, I always go with the 15 minutes and 1 hour, no problem. Only when you're trying to exit a trade, you can go to those. But to actually have a swing trade, to have a trade from 6,000 to 7,000 and you hold this trade for the entire swing, all you need to see in the market is 3 candles every single day. That's all you need to see. You don't need to see much. And the market, it's so nice that it's even that top is going to tell you, nope, you don't want to leave. You see? Right there. This one is higher. You can go in 4 hours and confirm it in everywhere. And if you in the middle of any swing, for some reason you got cheated, you got excited, and you grab some money, there is difference between swing trading and holding the swing than just in and out. In and out is an extremely different game. So now if I get out right here for any reason, there is no reason for me to get out here, but let's say I did. Why would I enter this? I don't care about this. I already got $1,000. Thank you. Continue. Every 3 hours you look at the market. Every 3 hours you look at the market. As soon as you see a signal, you will get a signal right here with those 2 candles. Most likely you will short. You will go in 4 hours, or one or whatever is going to give you a signal that this is not completed. Right here in 8 hours you don't see it, but there you have to see it. The market can never cheat you with the RSI. It have to tell you, no, it's going down. No more continuation coming. You go up, it's going to give you the divergence. Sell, and it's going to give you the divergence at the exact candle. I'm not talking about I'm talking about exactly 8 hour candle. It will show you where you have to flip your trade. And of course, this strategy that I'm telling you about, guys, it's against most of the people in the market, because most of the people in the market will never, ever, one of the rules, here you go, Bitcoin is going down more, will never actually sell a bullish market, like all my friends actually, and I used to do that too. I never sell a bullish market. Why would I sell it? A bearish market, why would I, why would I go against the trend? This is insane. But after you get couple nice swings, and you're not using 100x or 5x or whatever, you're just using your own money, and your swing trading is going to offer you 3 times a day looking at the candle, and you don't care. You see, remember we said this is challenging this right here, so it is really coming for it. Now I have a base channel here. Look at this. Let's go 4 hours. I have a base channel, so maybe if it goes up to here, I'll get out of the trade. I don't care. Even if it's going to continue to 0, I don't know. Why would I care? I just need to grab a piece, a secured piece, that it goes with the strategy that I follow strictly all the time, without, thinking about anything else. And the swing trading, guys, is different than actually holding in one direction, because you have to buy, sell, buy, sell, buy, sell. Or if you don't have one of those accounts that you can buy and sell, you can only play the upside divergence. So you know that this chart is gonna flip from this point. You know that we have a divergence right here. You know that this is higher, this is here is lower, but here you break the price. You know at this candle, specific candle, the market want to sell. You know that because you know where's divergence is. So you know that the market is going down, but you don't have an account that you can sell. That's okay. wait, 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 be patient, boom, right, this candle right here. What happened at this candle? The market tells you I'm going up. Oh, you take the swing, you ride the whole entire thing, or I never ride the entire thing. I don't care about the entire thing. I just ride the channel. So you ride your channel all the way until you come to this pivot right here. You see this one right here? It tells you get out of your position. Get the profit. Why? Because you have the divergence. And it tells you also you have to short. Of course, you don't have a short, but if it was for me, I shorted this one. I shorted every single leg. So I shorted this one. What happened? How did I know that the market is going to go up? It's simple. Right here at this candle, at the end of 8 hours, I look at the chart and I see that the candle could not break this one. So I know that the market is really tired from this one. So now I have only one position right here. I take the money, I take the profit, I go long, and I put my stops right here. When I put my stops right here, I'm not saying I win every time. A lot of time the market comes and boom, it eats my stop, and it keep going down. But the thing is this, when the market, every time the market will take money from you, it's going to end up with a divergence. So you just wait for it and you're going to grab the money again. And the great thing is when the market takes money from you, like $100, $200, $300, the next entry is going to give you $2,000, $3,000. That's how it happens all the time. Okay, right here at this candle, right there, up, down, it's a divergence. But when you got at the same candle, you look at this. At the same candle, the bottom is higher. Sorry, from here is going lower. The bottom is here is going higher. So would you sell this? Nope. Why? Because in the top of the candle you got a divergence up. That means the market is going down. And in the same candle you got divergence in the bottom right here. It says nope, the market is going up. So you have in one candle you got two signal. What are you gonna do? Nothing. If I were long, I'll get out of the position and wait for this candle to be broken, and I will enter the trade. In which direction? If the market is going to break it down, I'll enter down. If the market is going to break this candle up, I'll enter up. So I hope whatever you heard today is going to help you. I know it's an extremely long video, but it's most likely going to be helpful to a lot of people. Thank you guys. Bye.